Welcome to February's Business Outlook Survey press conference call. My name is Catherine Dibling, Senior Media Representative, and with me today is Senior Economic Analyst Mike Trebing, who will be answering questions from reporters about what our manufacturers said this month. I have a question from Dow Jones, Kathleen Madigan.
Oh, hi, Mike. Did anyone indicate how much of an impact the weather had in February in the Philadelphia area, since we did get a lot of snow?
Right. We had, as you know, two major snowstorms over the Mid-Atlantic region. One the 6th and 7th of February, and again midweek the following week. We did not get any comments about the snowstorm from our respondents. Most of the emails and forms went out before the snowstorm, and about a third of the firms were responding before the beginning of the storm. And there didn't seem to be any comments. So there were no comments in the forums about the snowstorm.
No.
We didn't focus their attention on it. We may do that as a follow-up, but surely there were firms filling out the form during the storm. One thing to point out is that the diffusion index and the questions are qualitative in nature, and we ask about the change for the entire month compared to January. So if the firms are thinking that some of that lost production is made up, that would be implicit in their responses.
Okay.
Kathleen, let me back up a little bit. Mike, can you please give a summary of the report?
Yeah, the statement. Manufacturing executives responding to the Business Outlook survey this month report that conditions continue to improve in the region's manufacturing sector. Indexes for current activity, new orders, shipments, and employment all remain positive and improved from their readings in January. There was a notable pickup in new orders this month. Firms remain generally optimistic about future growth in their manufacturing business, and there was a noteworthy improvement in capital spending plans.
Thank you, Mike. Kathleen, you have another question?
Yes, I'd like to talk a bit about the inventory special questions. That's the report. The special questions are definitely a big improvement from a year ago. And could that also be driving the gain in new orders?
Again, we didn't specifically try to tie the two together. However, note on the regular monthly survey, we did have the first positive reading on inventories since September 2007. And we also saw a pickup in the inventory forecast for 6 months in the questionnaire. And of course, we focused their attention on the inventory issue for the first quarter in the questions. As you pointed out, although we had about the same percentage expecting increases in inventories in the first quarter as expected decreases, when you compare that with the same question that was asked in February of 2009, we see a much smaller number for those that are expecting decreases in inventories. So it appears that inventory reductions have stabilized, and as people have been reporting, that is a positive sign, and the way GDP is calculated, the inventory deceleration, if you will, has boosted GDP numbers in the fourth quarter. So, but to your question, no, we didn't tie it to inventories or inventories to new orders.
Okay. And I have another basic question. Exactly what industries are included in this survey?
We have a broad collection of manufacturers, all located in 3 states. Firms with employment of greater than 100 workers. Representation that's pretty, representative of our district in general, with little less concentration in transportation industries. Perhaps a little less in chemicals and pharmaceuticals, as our district would suggest it should be, but it's more difficult to get those firms. We still have representation in steel, and although transportation sector is a smaller share, we still have firms that produce for the manufacturing industry and the auto industry.
Okay.
Kathleen, do you have any more questions?
No, I think that's it.
Well, thank you very much for participating.
Thank you.
And now for a short conversation about the BOS. We'll hit on some points that weren't talked about in the press conference call. I'd like to read the comments from the survey participants because I think they're very interesting. And sometimes they're what you would expect, considering the results of the survey. But this month, they seemed a little contradictory. What's going on here, Mike?
Well, they may be contradictory, I think, because there are so many firms that are still suffering from the recession and haven't seen yet a pickup in business. I think the most important thing is that we did see a consistency this month between the comments and the results from the indicators. We did have marginally more firms mentioning a pickup in new orders, which I think is important since we did have a fairly large boost in that number this month. Of course, the recovery is still not as broad of base as we would like to see it. However, I think in general the more positive comments this month were consistent with the general trend of the diffusion indexes.
Okay, thanks. What do the manufacturers say about the labor market currently and 6 months from now?
Right. We've seen an improvement in responses over the past 3 months, probably the last 4 months in terms of increases in average work week of these firms. Positive readings on the employment diffusion index for the last 3 months. Now about 19% of the firms reporting increases in employment, and a much smaller share of firms actually reducing employment. And looking 6 months out, we have about getting close to a third of the firms expecting some improvement in their employment levels, over the first half of this year. Those numbers have stayed pretty stable for the last several months. But the two combined, I think it's a stabilization, if you will, of the declines that we saw in manufacturing during the recession.
That's good news. What about capital spending? How confident about the economy do firms have to be to increase their plans for capital spending?
Well, we didn't see much of an improvement in the capital spending index until just the last few months, and this month, rather sizable increase from 24% of the firms expecting capital spending increases over 6 months to about 35% of the firms, and an appropriate increase in the index for that measurement as well. No specific comments about capital spending, but an improvement in the measurement of the survey results. So I think it has taken a while. I think, although we've seen positive numbers on the activity and orders numbers for 6 months now, it hasn't been until just the last few months that we saw improvement in capital spending outlook.
Great. You've just been listening to February's Business Outlook Survey, press conference call, and a brief conversation with Mike Trebbing. Next month's Business Outlook Survey will be posted on our website on Thursday, March 18th, 2010.